Now on Overnights,
I believe in reason and common sense.
Leith Van Onselen from Macro Business with the Treasury of Common Sense.
Common sense never goes out of style.
The Treasury of Common Sense with Mr. Van Onselen, Leith is Chief Economist of the MB Fund and MB Super and co-founder of Macro Business. He's on the line. G'day, Leith. How are you?
Yeah, good. Thanks, Mike. How about yourself?
Well, thank you. How's that Treasury of Common Sense? Is it being topped up or depleted?
Well, I mean, good days if you're a mortgage holder. Not to give away any spoilers.
But perhaps the other side of that coin, if you're a self-funded retiree, you wouldn't be smiling so much?
Yeah, look, I mean, I'm obviously jumping the gun. There's not likely to be any interest rate cuts right at the moment and not next week, but they're certainly in the pipe. So, yeah, look, you know, it's been a pretty brutal couple of years, you know, especially if you carry a mortgage. And it looks like there is sunshine at the end of the rainbow.
So, Leith, there's a heading, I assume this is a technical term here, on top of one of your graphs. It says domestic demand is screwed.
Yes, Mike, that's an interesting description. So basically, the Australian economy, we all know it, is basically in what's called a per capita recession. So effectively, the economy's growing, but it's not growing by enough to keep up with the huge population growth we've had through, you know, extremely high immigration, record immigration, in fact. And what that means is basically, you know, households in general and Australians in general, if you average it out, are actually have been going backwards for 3 consecutive quarters if you measure it by GDP. If you measure it by household income, they just last year, well, in the year to September, which is when the data goes up to, had the biggest decline in their real incomes in history. So their real incomes went backwards by about 6%. Now, that's a combination of wage growth not being high enough to keep up with inflation, and obviously, you know, increase in spending going on mortgage rates, rents, energy, and all these other things that have basically smashed us in the face. And because of that, basically households are cutting back on their expenditure. I'm talking about on average. So we've got more households, which is keeping spending up overall, but individual households are cutting back. And that was shown on Tuesday's retail sales data, where basically for the whole last calendar year, we only had 0.8% growth in the value of retail sales. Now, you might say, oh, that's growth. That's not too bad. But the problem is the population grew by about nearly 2.5% over that time. And we had inflation over the period that was actually measured, you know, of close to 5%. So practically a 6% decline in retail sales once you adjust out for inflation and population growth. And that's pretty much been the story of last year. And I think it's going to continue this year, where basically households, you know, are doing it tough financially. They cut back individually, but we've got so many households joining Australia through immigration, etc., that the economy continues to grow, and we actually avoid overall technical recession, is what they call it. Yeah. But we continue this per capita recession, whereby on average we're going backwards individually.
I don't know if this is something you can assess, but if we didn't keep importing more consumers, would we now be technically in recession?
Yeah. So the national accounts data, which basically measures the GDP, etc., which is what, you know, economists refer to the most, that's current up to 30 September of last year. And basically what it showed is that once you adjust our population growth, the economy fell by 0.3%.
Yeah, God forbid that I should promote division and class envy, but the GDP overall is going up. Somebody's doing well. Is this a case, as Mr. Garrett once put it, the rich get richer and the poor get the picture?
Absolutely. So, yeah, you might always wonder why big business is always pushing for higher immigration. And well, the reason why is because you know, running a high immigration policy is fantastic if you're at the top end of town. So just think of, you know, your Jerry Harveys, your Harry Triggerboffs, etc. Yeah. Having more consumers for them. They own a lot of land. They own, you know, obviously a lot of land, or, you know, if you're a miner, resources, or, you know, whatever. Like if you're a capitalist and you own the factors of production in Australia, you gain from having more customers buying those things. Yep. Problem is, if you're an everyday Joe, you know, as we're showing, we're not getting the benefit of it. And there's effectively 3 Australias. There's another aspect to this, Mike. There's actually 3 Australias at the moment. Now, basically, roughly a third of Australians rent. They're getting smashed by, you know, very high rental prices, rental growth. Roughly a third of Australians have owner-occupier mortgages. They're getting absolutely hammered by the biggest and steepest rise in interest rates in, you know, generations. And then you have a third who don't who own their homes outright and don't rent and obviously don't have a mortgage, they're actually doing very well. So they tend to be older, and they're the ones who basically accumulated massive savings over the pandemic as well. So most of the savings went to those people, which tend to be, your retirees, and they're actually doing really well. And they've been spending well above the inflation rate since we've had this, rise in interest rates, because they haven't been affected. But it's the other 2/3 who've been getting smashed. So we've got this kind of unfair burden, which has gone on the 1/3 of people that obviously have mortgages. We've also got this unfair burden from the high immigration on renters who are getting, seeing their rental costs go through the roof. And then you have 1/3 of Australians who are pretty much sitting pretty because they own their homes outright. They tend to have lots of assets, so they've gained from the interest rate rises. They might have an investment property too with a very tiny mortgage or without a mortgage, and they're gaining from rental increases and property price appreciation. So, yeah, it is a case of the haves and have-nots. And then obviously you've got the big end of town who are the uber rich, and they're gaining as well.
So, Leith, as they say, making predictions is always dangerous, particularly about the future. But do you see this improving, getting worse for the 2/3, or pretty much the same for the next few years?
Look, I think it's going to be a pretty tough year, although there is a bit of light at the end of the tunnel. So basically the inflation data that came out yesterday was very good, right? So, right. So the Australian Bureau of Statistics released the Q4 quarterly inflation figures, and what that showed was that basically inflation has come down to 4.1% annual growth.
Yeah.
Now that's still above the RBA's target, but that was below what economists expected, which is 4.3%. It's well below what the RBA had forecast, of 4.5%. So effectively, inflation's coming down harder than what the RBA expected, than what economists expected. And what that effectively means is that we're not going to get a rate rise next week when the RBA meets. And if anything, given that we've got this weak economy with retail sales, consumers cutting back, we've got rising the unemployment rates rising slowly. Basically, the per capita economy is in pretty deep water.
Indeed.
What it effectively means is the RBA is very likely to cut rates in the second half of this year, and that'll give relief finally to our long-suffering mortgage holders. Also, immigration is forecast and is likely to fall this year from what it was last year. It's still going to be very high, probably the second highest print on record.
Surely it has to. I mean, it just can't continue at this rate. Surely.
No, it can't. So it was basically 518,000 last financial year, and the federal government in their December mid-year economic fiscal update tipped it to be 375,000. And so that's obviously coming down, a reasonable amount, but still that figure would be the second highest in the nation's history. So it's still an incredibly large figure, but at least that'll give some marginal relief to the rental market, although unfortunately dwelling construction rates are also falling. So you're going to have slightly less demand coming on compared to last year, but also we're probably going to have less supply. So, it's still going to be tough for renters, but hopefully rental inflation might have at least peaked. It's still going to be high though.
Leith, appreciate your time and comments as always. Just one last quick question from me. Our beloved Treasurer, Smiling Jim Chalmers, is up there talking about the 4.1%, however you see it, saying, who's a clever boy then? But once again, however you see the 4.1%, does it have anything to do at all with Smiling Jim?
No, it doesn't, unfortunately. And in fact, most of the inflation we've got left is actually what my business partner Dave calls elbowflation, right? So, so effectively, what's driven the fall in inflation? This isn't just in Australia. This is a global thing. It's happening right across all the basically advanced economies. They're all falling in unison. We're having basically a big fall in goods inflation. So effectively, anything that comes off the boat is falling very quickly, actually falling in price. So deflation.
Yeah,
and that's because all the supply bottlenecks from the pandemic have gone the other way. Obviously, demand's lower as well, and what that means is that that's dragging out inflation. So it's all basically a huge reduction in imported inflation, TVs, household goods, all that sort of thing.
Yeah.
But the area where inflation's still very sticky and is a problem is things like rents.
Yep.
So rents are still going up at over 7%.
That's the horror story.
And that is directly impacted by the federal government's Big Australia policy. So Jim should really stop smiling. His government is still making the situation worse than it needs to be.
Leith, appreciate your time and comments once again. Thank you very much.
No worries, Mike. Anytime. Thanks, mate.